We're still up 100 today here at the New York Stock Exchange. We do have some special guests from Millburn High School. Before we take it to the experts, let's ask this expert. Matt, what is going on with the price action today?
Well, we're seeing some follow through to yesterday's really snapback rally, but there's a lot of red warning signs out there right now. You know, you're seeing utilities up, you're seeing oil down, you're seeing gold being bought, you're seeing the VIX up. So something's kind of give here. We're not quite sure yet. So we'll take the 100-point rally after the 500-point move yesterday.
It's nice to see gold finally acting like gold, but you know what? I think we have a golden opportunity to take it to some experts that we have here at the New York Stock Exchange to ask some questions. So who would like to ask a question for Matt Cheslock? All right, come right up. What's your name?
Matthew, also. Matthew Robleski.
Wow. You know how to work the crowd here, Matthew. All right, so what's your question for Matt Cheslock?
Hi, so it's been very clear to me that over the past decade, the stock exchange has become a lot more automated. My question is, how much does human emotion still play a role in the stock exchange, especially with like prices and quantity demanded certain stocks?
Well, you always need a human to buy stocks, right? Someone has to be the end customer. So whether it's an algorithm, whether it's a computer-driven model, you still need someone at the background supplying that money. So human emotion does take a lot into consideration. People have a tendency to sell when the market goes down and buy when the market goes up. It should be the contrary, right? You should be buying dips and selling rallies. So it's still a massive part of the overall economy.
Okay, awesome. Thank you.
That's a great question. Thank you. All right, who's next? What's your name?
Judah Engel.
Judette?
Yeah, Judah. In what ways do these automated financial managing companies differ in the services they offer to companies and
I think a lot of the automotive services companies probably, its cost basis is probably the major driving factor why you would use them. You still probably want someone that's really an expert in managing your money. It's very easy over the last 10 years to see the market go in a straight line. But when the markets are a little bit dicey, as they were back in 07, 08, before you were investing or before maybe even you were born, you know, the markets were a little more fragile. So you really needed an expert to guide you through those times.
Man, you guys are giving us a run for our money over here. All right, one more question. What's your name?
Tejas Gupta. I was wondering, how should someone who's like recently graduating high school, like a lot of my friends here, begin to start investing?
Well, the easiest way is to invest in something that you know. And that's the first and foremost advice I can give you. Don't invest because someone else did it or when they did it. No one ever tells you about their losses. They only tell you about your wins. So if you do your own homework and invest in the companies that you know from top to bottom, you'll have a better chance of starting out on the right foot.
All right, now I have one question for all you guys. Who's having a good time today at the New York Stock Exchange? Raise of hands. All right, thanks for tuning in. We'll see you next week. Thanks, Matt.
All right, thank you.
Thanks, guys.